Ladies and gentlemen, boys and girls, children 18 plus. You are tuned in to the Loan Officer Podcast with me, Dustin Owen, and my main man,
JC.
John. I'm still wearing my Easter shirt,
It's
Coleman.
so fly, I decided to wear it twice.
Look at you go. It's so funny. People who are tuned in on Spotify or Apple Podcasts right now are like, I don't know what they're talking about. People who watch us religiously and consistently on YouTube are like, haha, he just wore that shirt last episode. And people who are binge watching, look, if you're binging, we appreciate the hell out of you.
Swerve.
But man, your head's probably spinning. You're not even noticing what we're wearing.
Because the amount of information and content is just
Overload.
Just what?
I'm trying to binge watch. I just binge watched a really cool series on HBO Max with Kate Winslet, Mare of Easttown. M-A-R-E.
Yeah?
Mare.
Like a dog, like a horse.
Like a horse.
Yes.
Yeah, but it's actually her name. They call her Mare.
Oh, that, is it
Like
good?
Mary Ellen or Mary Beth or something.
I stumbled upon the...
It's really good, and you do have to binge it. Like it's a cold, wet weekend.
Yeah.
Like I think it's 8 episodes. Just
Good.
spend 8 hours in front of your flat screen and crank it out.
I just found Hard Knocks just started up again mid-season.
What?
Yup. You gotta get on there. Scroll through. I was like, what the hell is Hard Knocks? Yeah, they do it in season now.
With the Colts or
Yeah,
who are they with?
The Colts. Yeah, the Colts.
So I got on the very first Hard Knocks.
Like ever.
Yeah, like not I was on it. I wish I was on it, but like
Right,
no,
right.
like I watched it.
Yeah.
Yeah, it's just one of those shows that wherever I was living at the time, some apartment probably had free HBO.
Yeah.
Because I sure as hell couldn't afford HBO back then. So it's and it came on, and I want to say that would have been with the Dallas Cowboys. I think the Dallas Cowboys were the very first one.
Yeah. But now that they're back on too, so you got to binge that
Okay.
if you want. There's only a couple
Yeah,
episodes.
and you can binge this.
Yeah.
We're 180 plus episodes, and you know what we need to do, John? And maybe we can do something like during the holidays.
What's that?
So the production quality of the first probably 2 or 3 dozen of our episodes, pretty trashy.
I wouldn't call it trashy. I would say we were finding our way.
Okay, that's a polite way of saying we were average, but not really good. I think we're really good now. I don't think we're great. I think we have a long way to go before we're great.
1% every day.
But if we get better, 1% per day, like James Clear teaches in his book Atomic Habits. But no, I think we should go back, and especially certain episodes. Like there's certain episodes that we did. I'm like
12-week challenge, scripting.
12-week challenge, yes. And we'll do that. But hey, look, if you want to start at number 1 and work through number 183, I think this is 183 if I were to guess correctly, or 182, feel free to do it. And if you want a good laugh, listen to episode 0, The Launch.
Damn.
That was legit John and I sitting down
Does this thing
and
even
just
on?
trying to figure
Is
it
this
out.
even on? Is this thing even on?
Yeah.
Hello? Oh, we're going. Yeah, we're live. Oh, hey guys.
It's nuts. And then here we are only weeks away from finally having TLOP Online launched.
Yep.
We're watching our YouTube subscribers grow.
Yeah,
We're not at 6K yet. And honestly, I'll be honest. I set a BHAG. I wanted that thing to be 10K
Yeah, right.
by the end of the year.
Yeah.
Now I'm like, shit, are we going to get to 6K by the end of the
Well,
year?
it's on the listeners and the followers. Tell a friend.
Tell a friend.
There you go.
Tell a friend, please log on to your YouTube account
Create
and
a fake
subscribe
one. Yeah,
at the Loan Officer Podcast. No, I don't want anything fake.
Okay.
I want it.
Thank you, Dustin.
I want it real. I want it authentic.
Thank you.
Yes.
No bots.
No bots. No, we don't pay for likes. We
Thank
don't-
you. That's what I'm trying to tell you. It takes time. If you don't pay for likes and you do it with integrity and the real way, just like anything, Rome wasn't built overnight. We're doing it the right way.
Yeah, but I do see our likes on IG grow. I love it. I love it. So we're on Instagram, folks. We're on TikTok. I'm realizing now we don't TikTok anything like TikTokers TikTok.
Yeah, I don't-
And there's some really good people that are in our industry that are TikToking.
Yeah.
And I think one day I want to try to find one to come on the show and we can talk about that.
That's
Someone
a
who's
great-
had success
Yeah,
with it.
That's put it in the good
Yeah,
idea.
yeah, because I tend to follow people in our industry that I don't know if I just dig their TikTok. The
Right.
problem is some people will follow us, and before I follow them back, I try to go to their account, and then if it says it's private, I'm like, oh,
Womp womp.
yeah. But if it's not private, then I can scroll through, and I tend to like connect to people that I'm like, oh, I really like that post, or I really like that TikTok.
Right.
But yeah, so yeah, we're on TikTok, we're on Instagram, we're on Facebook, we're on LinkedIn at the Loan Officer Podcast.
Word.
And if you ever want to get a hold of me, I'm Dustin Owen on LinkedIn. He's John Coleman. Just Google him. You'll find him.
Don't Google me.
Yeah. One of our listeners reached out to you because he wanted some help with what again? Uploading
Yes,
Facebook.
you did. Yeah, you did.
Were you able to help him?
Yeah, I'm going to reach out to him after this. I need to hop on a call.
You need to hop on a call?
Hop on a call, yeah. It's not good.
How long will it take you?
As long as it takes, because that's how much we care about our listeners.
Okay, I like that answer, John.
I've gotten so political. I know the answer to these, man. You can't.
I like that answer. I just don't know if
I should be investing.
like should this be an entire episode?
What he said at his
Yeah,
question?
but what I don't know is how many loan officers. Like what he's trying to do is upload a list of realtors into Facebook and then run targeted ads to those realtors.
It sounds like just a technical thing. Like he got to the final stage and was like, something's not working. So I'll probably just troubleshoot.
It's kind of like I was trying to boost a post on LinkedIn and then it got denied.
Yeah.
And that's as far as I made it.
Right.
And I just clicked delete.
Right.
Yeah.
And then that's it.
And then the person from LinkedIn tried to reach out to me. And then I marked their email spam and I'm like, I'm done.
Forever.
Like I can't do this.
Can't do it.
I can't do this.
Can't
I
do it.
don't have enough
I'll
bandwidth
help
right
him.
now.
I'll help him out.
But no, it's going to be an exciting. The website will finally get launched, tloponline.com, theloanofficerpodcast.com. I've actually been working with John and Dennis, and I've been sitting down and I've been watching the videos that they're creating.
Exist.
No, they're good, John.
Thank you, sir.
Like once you can get them labeled the right way or titled the right way and then described the right way, and then we're talking about putting all these various links to news articles, links to trade publications, links to the selling guides. I mean, I tell you what, I wish this podcast, and we're building it because I wish this existed in 2004 when I got into the business.
Damn, that's deep.
Right? Like, and it didn't. And so much of who I am is because of that. So much of the reason why I signed up to be a mentor in 2006 when my company that I worked for rolled out a mentorship program, it wasn't that I wanted the $500 marketing credit that they were offering. It's like, no, I wanted to give back because I felt so lost in my first 2 years. And that's what's made this podcast so fun is that I'm able to take what's going to end up being 18 years of experience, trials and tribulations, and just pour it into this microphone while talking to my friend John Coleman.
Well said, Dustin.
Yeah. So speaking of which, we're going to do a viewer request.
Yep.
And viewer request is?
Ashley on YouTube had said, "Hey, Dio and Justin." Dio and Justin.
Did they call you Justin?
No, they said Dio.
If you call me Justin, I'll lose my shit.
Yeah, I know, clearly. And it's not Owens with an S, it's Owen.
Thank you.
She wants to know how do he or she, Ashley, I don't know, wants to know how do you build more builder business, home builder business?
Okay, so you want to make calling on home builders a part of your silo, which we talk about, right? Like 75% of your realtors, again, this is if you're a loan officer, it's a very loan officer centric episode. So if you're not a loan officer and you don't care to ever be a loan officer and you're not friends with loan officers and you're tired of hearing us speak, like literally just turn us off.
Or you can still listen because you like the way our voices sound.
They like your voice, John.
I've heard.
Yeah, they like your voice. So you want to call on realtors, or not realtors,
Builders.
on builders.
Home builders.
Yes. First and foremost, it's a long play. It's a long play. It's a deep relationship. You have to go in there understanding that builder more than likely already has a mortgage company, and they may even own the mortgage company or have an ownership interest in the mortgage company.
In-house.
Yep. Now, that doesn't mean it's a hell no. It just means it's going to be harder for you to walk in there and anticipate just having leads tossed your way. But the same thing applies when you're trying to build a relationship with a top realtor in your market, right? Like you don't just walk in and a top realtor says, "Oh my God, you're amazing. I love everything that you're saying. I trust you. And I'm just going to start referring you all my buyer business." No, you have to earn it. So the same thing goes with a builder. So here's what I'm going to recommend. First, you need to understand who is currently the builder's in-house. Do they have one or do they have three? If they have three, I have good news. You got a chance.
Really? The more they have them?
The more they have, in my experience, the better chance you have.
Explain.
One of those three is not working out. One of those three is not cutting it. You can replace them.
Cut the fat.
They're willing to do three. They don't care which three. They just care that those three are good and they treat their clients well and they get their deals closed on time. So a builder who's willing to refer business to multiple lenders gives me that opportunity. Okay. If they only have one, okay, they probably own or have ownership interest in that mortgage company, at which point you need to figure out where's the chink in the armor, where's the Achilles heel. You're going to be able to approach their sales agents and either offer a product or a program that their builder's lender, I should say, doesn't currently offer. Or you're going to be able to offer a service, maybe a 15-day closing, maybe a platinum pre-approval that they currently don't do. You basically need to go in there and say, give me everything that your lender is saying no to. Let me take a look at it. Let me be your second look lender. Give me everything that you need to get closed by a certain date because your fiscal year is ending. And if you don't close, it's going to impact the financial feasibility of the company. And your lender is overwhelmed. Give me some of their overflow. Let me show you how quickly I can get a loan closed. Right? Those are things that you're going to do, but you're going to start by there's two ways of doing this, and I've seen both succeed. You can start by just going after the top. Like, find out who is the national or the regional sales manager. Who is that guy or girl in your local market who oversees the 4 or 5 communities that are being built, right? Because each community is going to have 3 or 4 sales reps. But if you have 5 communities in your market and each community has 3 sales reps, that's 12 to 15 sales reps. They have someone managing them. Mm-hmm. You can go directly to that manager who has the most clout and the most pull and build a relationship with him or her. Now, that's a little bit more difficult to do because it's one person who's very busy and feels very important. But if you can get that person to meet with you, and if you can figure out the value you can bring them, they may, at this point, use their influence to notify all 15 of their sales reps, hey, look, if our mortgage company says no, I want you to send everything to Linda, or everything to John, or everything to Dio. Mm-hmm. Right? So that's one way to do it. We have a loan officer who works for us, who's an amazing originator. That's what he did. He went straight to the top. The 7, 8, 9 different mortgage companies. Met with 6, landed 1. But that 1 is worth 4 to 6 closings every single month, and it has for the past decade.
Damn.
For the past decade.
So if you're able to wrangle one, I want to say cash cow, but they're steady businesses.
Yeah. Oh, look, that's why I said it's a long play. It's a long play. Most millionaires became millionaires over the long term. Right? They invested consistently over time and allowed their money to compound. They didn't get rich quick because they had the right stock hit.
If a builder has like an in-house lender, and let's say it is one person, and let's say they're building like a subdivision, new subdivision is going out, has 30 homes, and the in-house builder's like, hey, use my in-house loan. Does that mean that loan officer is getting like all the homes in that community?
Usually about 80%. That's because the builder's offering this crazy incentive to use the in-house lender. But that loan officer isn't getting paid anywhere near what loan officers make at companies like Fairway, Cross Country, Waterstone, Guild, etc.
Gotcha.
Yeah, they're probably making 1/3 or 1/4. It's a captive audience.
Gotcha.
The people who make 100, 150 basis points, they're making that because they're going out and bringing the business in. They have the following. They have the database. They have the referral sources.
Gotcha.
Yep.
Okay.
So the one way is just go for the top. The other way is make friends with the sales reps. Now, in order to do so, you have to have a milk route. Because it's a long play, you have to consistently be persistent. That means every week or every other week, you need to make a stop at each subdivision where you're rolling in there with your smile and you smell good and you look good and you're just popping by to make sure there's nothing you can do to help them. Because look, out of sight is out of mind. Right? So if you can stomach walking in and for them to be like, yep, we don't have anything for you. Nope, everyone bought cash this week. Nope, everyone's using our preferred lender. Okay, that's fantastic. Eventually, they're either going to be lying to you, then you call bullshit. You're like, look, this is crazy. Like, I work with builders, even if you don't tell them you do. I work with builders. Or I'm a big fan of, if you don't have a me story, tell a we story. We work with builders because your company does. We've never had a builder that literally either has a cash buyer or everyone uses the in-house. There's always some that the in-house can't get qualified. You guys are awesome. You're an anomaly.
Yeah.
And then in 2 weeks when you pop by, we're like, hey, are you still the anomaly?
Still cash only. Wow, that's great.
But you have to do that.
Right.
But you have to do that for 9 months, 12 months, 16 months. And then when they give you that opportunity, understand it's going to be a turn down, which means it's going to be a hard-ass loan.
Damn, yeah.
And they want to see how you operate. It's an audition. Even if it's a fast no, make sure that when you say no, you explain to them why it's a no. And then tell them how it could be a yes. Right. Because just because it's a no doesn't mean they won't refer you again. But if you say, nope, can't do it, and you don't tell them why, and you don't find a way to yes, then it probably will be the last time that they refer
question
you.
for you, because you said that compared to other loans like VA loans, USD loans, and like if you get builder referred, is that client usually a little not easier, but is it
no?
More,
it's the same.
It's the same.
It's the same.
Same. Okay.
Yeah, it's all geographically.
Okay.
So like someone who's buying in a $650,000 or $700,000 subdivision. I mean, it's a different type of loan than someone who's buying a $250,000 starter house.
Right.
But I wouldn't say necessarily one's easier than the other.
Okay.
Right? Some are easy, some are not. Some are well qualified, but still paperwork intensive. Some have minimal documentation, but it's, by a horse's hair that you're actually getting it qualified and through the system.
Okay.
But I think the last thing people should know when you're working with a builder is as you build that relationship, you better be detail oriented. You better be organized. You need to understand how to track everything on a spreadsheet. Because if you're really good and you want builders to consistently work with you, you need to be able to hop on a pipeline call every single week and give them an update on all the files that you have in process. You also need them to give you an update. Hey, how's this closing date looking? Originally, you wrote the contract to close May 1. Do I need to push it out to June 1? Or are you going to be able to close it April 15? When you're working with a builder, you have to understand that they're going to ask you to app and disclose a loan that's not closing for 9 months. And then in 9 months, you may have to worry about your credit report expiring, your income documents expiring, your asset documents expiring. When you're working with a builder and they're up against a deadline, you and your company may very well have to be willing to close a loan 2 hours after you received your certificate of occupancy or your CO. And also, when you're working with a builder, you need to know what is a CO. Like you should. Like, what is the expected time frame? You should be able to speak builder language. Like, what's the process of building a home, right? From everything from clearing the lot to laying the plumbing and the electrical to laying the foundation to then doing the frame. And then from frame, you do your exterior, then you do your trusses, and you do your roof. Once you can keep the elements, water and whatnot, from coming inside, now you can start doing things like the interior wiring, the drywalling, et cetera, et cetera. Last thing you're going to do is landscaping, right? But you have to understand that. So learn just the most basic step-by-step. How do I build a house? What's the time frame? And then, do you have the ability to do extended locks? Do you have the ability to talk to the builder about 2-1 buy downs if and when we're ever in a market where that would matter? Right now, that wouldn't matter. Right now, people are like, what? What's a 2-1 buy down? Don't worry about it. It's irrelevant. But I'm going to tell you this, if and when we get to a time frame where we actually have a gluttony of inventory and builders are trying to unload their inventory, then you need to be able to work with your builder on marketing tips and tricks and tactics on how they can unload these properties. And teaching a builder how to cough up a little bit of money up front to offer an incentive and use that incentive money to give the client a 2-1 buy down, that may be the difference between that client choosing your builder versus another builder. In order to prevent you guys from going to Google and looking up a 2-1 buy down, just know this. Here's how it works. Let's say the market rate today is 3.5. On a 2-1 buy down, that means in your first year, your rate's going to be bought down to 2% below current market. So it'd be bought down to 1.5. The second year that you own the home, it's 2.5. And then the third year and every year afterwards, it's the 3.5. That was the market rent. You would never do that in a market like now because builders don't need to incentivize home buyers to come buy their homes. Right now, builders aren't building enough homes to keep up with the home buying demand. But if and when that were ever to change, you as a lender who specializes on partnering with builders need to understand what are some things you can offer. An extended lock with a float down option, that's huge. Rates are on the rise. If you can lock in a client today and guarantee that rate in 9 months, that may be a competitive advantage. If you then offer a float down option just in case rates get better, that could offer a competitive advantage. These are things that you normally wouldn't have to even understand when you're dealing with your resale transactions, but working with new construction, you do.
That really, those some words I've never heard. That second one you said.
Which one?
I don't know.
Extended lock with a float down option or a 2-1?
No, I've heard of the 2-1 buy down, but the float option. Are there how do you? There are a lot of these little lingo. There seems to be their own interior lingo when you're dealing with builders as it pertains to.
Well, I think we all have our own language, right? That's what makes a profession a profession. If I said to you, hey, John, I was at work today for 10 hours and we had 17 ups, of which I walked 7 and 2 sat.
Billiards? I don't know.
No, car lot.
Yeah.
Car lot. We had 17 people walk in. They're ups. I walked 7. I showed 7 people properties. I got 2 of them to sit down and actually talk about writing a contract.
Right.
Right? That's
Where would one go to find out all the terms you said about builder stuff? How? Because I'm interested now. Like, how do you get that? Like, you just gotta. Is there a place?
like
to
understand what a 2-1 buy down is.
Yeah, like,
talk to your sales manager.
Okay.
That's a mortgage terminology. Okay. Yeah, you want to know what an extended lock is? Again, talk to your branch manager. Talk to your sales manager.
Right.
Do you want to know whether or not your loan on your mortgage company offers a float down option on an extended lock? I mean, check your intranet, but also check with your sales manager.
Right.
But that is definitely a terminology that you should at least understand before you go on that sales call. But then also understand like why it would work. Like, God forbid, do not go calling on a builder today talking about the 2-1 buy down when
I got a 2-1 buy down. Hey, yeah.
They're like, and the builder's like, well, who's going to pay for it? Well, you are. The builder's going to be like, get out of here.
Right.
I ain't got to pay anything.
Right.
Like, builders don't even want to pay realtor commissions right now. They don't feel like they have to. Like, they don't feel like they have to. Here's something else. Now, this is a very specific product, and we actually brought in a industry expert. It must have been episode probably 30-something. We had Eric Putt. Eric Putt's a top producing branch manager who specializes in doing construction to permit financing. We call it CP financing.
Yep.
Dude, if you work for a mortgage company that has a solid CP loan, this is a way that you could actually show a home builder how he or she could double their production.
What?
Yes. A lot of home builders that are out there, they don't like they just build 6-8 homes a year. They're working off their own money. They build it. Someone buys it. They sell it. Mm-hmm. Well, there's only so much capital they have at their disposal. They can probably only build 6 or 8 homes or 4 or 6 homes. Mm. But what if you could come to them and say, wait a minute, why are you, John, if you're a small home builder in a local market, why are you using your money? Or even if they're using the bank's money, the bank only offered them an X amount of line of credit to build these homes. Why don't we find lots for sale? Why don't we purchase those lots? Then we advertise the home in the MLS as a pre-construction home. And when the home buyer wants to buy that home, they meet with you. And we, as the lender, get them qualified for a construction loan. And now we're not using your money, John, to build the home. We're using the bank's money. And the person paying that bank note is the home buyer who you're building the house for. Yeah. So if someone understands a CP product, you could go out and teach certain home builders how they could actually increase their production by doing so. Mm. Now, there's a plethora of home builders out there that only build and they know CP. But maybe your CP product is just elite. Like, that's something that our loan officers here have at Waterstone. We have a phenomenal CP product. I wish more of our LOs would go out and sell it because I think it's best in class. Especially when you're talking about a conforming loan size, which now is $647,000. Wait a minute. I can go to a home builder, have them build a $675,000 custom home, and I can do a 30-year fixed, one-time closed construction loan with only 5% down? What? Mm-hmm. Yes. Like, if you have that product and you work for a company that has that has that product, you should be out looking for custom home builders. And do you know how you find custom home builders?
How do you find them?
Google. Custom home builder, insert city. Custom home builder, Alpharetta. Custom home builder, Charleston. Custom home builder, Richmond. Custom home builder, Rehoboth Beach. Custom home builder, Springfield. Mm-hmm. I'm going right up the eastern seaboard. Yeah. But, hey, call them up, especially if you have the product. But we started off talking about how do you call on tract home builders. Mm-hmm. Like a tract home builder, those are the Lennars, the D.R. Hortons, the Richmond Americans, the KB Homes. Like, those are the bigger companies. You can build relationships with them. Just know that's a long play. Mm. A not so long play is going after custom home builders if you have the right product. Right. And then just know along the way, you have to be able to speak their language, speak their lingo, join their trade organization.
There's an idea.
So if you are in Orlando, Florida, like John and I currently are, GOBA, Greater Orlando Builder Association. Mm-hmm. But don't just join it because that doesn't do shit for you. Join it and attend a meeting. Get involved. Start networking. Take someone to lunch. Ask them questions. And learn how the process works. Be naturally curious about, well, what comes first? What comes next? What's your biggest hang up right now? Is it getting lumber? Is it getting trusses? Is it getting permitting? I mean, I got friends that are taking like 3-4 months to get a freaking permit, let alone the supply chain issues with getting lumber out of Canada, let alone trade workers, right? And getting the right appliances. But you kind of got to become it. You got to work it. But it's like anything. If you're going to do it and stick with it. You can't half-ass it. You can't be like, today I'm going to go do this.
All right, you got to be all in.
Yeah, I went and played baseball for the first time in 2 years.
Did you hurt yourself?
I'm hurting. I am hurting.
Right.
And one time I'm very happy. I went 2 for 4, 3 RBI.
There you go.
Yeah, they stuck me right back in the 4-hole. First at bat up the middle. Second at bat was a double off the wall backside. Scored 2 runs.
Is this like serious baseball or some like church league softball thing?
No. Like this is
like
real.
Like past athletes. Like, hey, we play serious.
Like wearing a helmet. I had to get out my jock strap to my cup from
What?
1997.
You have a uniform?
Uniform, helmet, wood bat.
What?
Yeah, 9 innings. It's the real deal.
Okay.
Yeah, we go play on one of the high school fields.
Nice.
Yeah, it's a 35 and up league.
Nice.
That I've joined.
Okay.
I used to play in it years and years ago, but when my daughter and I started riding horses, I started riding horses instead of. But right now, her dance competition schedule is so crazy, we haven't been able to get out to the barn and ride. Mm-hmm. And I'm tired of not having anything to do on Sunday, so I started playing baseball again. But what I was getting at is I can't expect to not have played the sport for 2 years and be mad that at my third at bat, when I got up with bases loaded, I hit a chopper to the shortstop. Right? I can't be mad that when I went to throw a ball, it sailed on me. Right? No, I'm rusty. Mm-hmm. I'm not doing this. To take my fun Sunday and talk about business, you can't expect to just call on a builder here and there and then not do it for 3 or 4 months. No, you got to be all in and be dedicated for 2 years. 2 years. Create a milk route. Time block on your calendar. Set goals. I'm going to call 10 custom home builders a week. I'm going to schedule 1 appointment a week. I'm going to do this for the next 12 weeks. And then by doing so, I'm going to start getting pre-approvals for people to build a custom home. Now I have to learn how to approve that builder for financing. Now I have to learn how the CP product works. Mm-hmm. That's if I'm going after custom homes. So I'm going after track homes. I need to figure out who are the major builders in my market and then who manages this territory. And I would target the manager and I would create a milk route. A milk route's where I'm going to get in my car and I'm going to do pop buys every other week. Every other week, I'm going to have it mapped out that I'm going to spend 2 hours in my car, listen to a podcast like this or maybe Joe Rogan. Maybe I'm doing my TBD calls. Maybe I'm doing my Tuesday status update calls. I'm multitasking when I go from, maybe I'm doing prequals. I love doing prequals in the car. Do a half-hour prequel in the car, send them to my website. By the time I get into the office on the next day, I already have their application, their credit pulled, and my assistant is requesting their alternative documents. Right? So like you can do your milk route. You stop in, you spend 15, 20 minutes on average in each one, and you do so until you build relationships and you start getting consistent business. You start figuring out where's their pain. Where can you bring value? And you have to ask them, hey, where's your pain? Hey, where do you think I can bring you value? And say, come hell or high water, I'm going to stick to this. I'm going to do this consistently. I'm going to be persistently consistent. I bet if you just did it for 6 months, you would have so much traction you'd want to continue it for 24. Mm-hmm. But mentally tell yourself you're going to do it for 24 months. Ashley, I hope that is somewhat of what you were looking for. And everyone else who has tuned in, if you liked what we talked about, thank Ashley.
Yeah, thank Ashley.
Thank Ashley. It was a request that came in via YouTube.
It was a YouTube comment.
Yep.
Came in episode. There you go, folks.
And hopefully this will make you want to go on YouTube. And if you haven't done so already, subscribe or ask a friend to subscribe so that we can get to 6K and on our way to 10K in terms of subscribers. This is all the time we have for you today. We appreciate the fact that you do tune in, that you do like us, you do share us, you do give us a 5-star review. Follow us on all of our social platforms at The Loan Officer Podcast. He's John Coleman. I'm Dustin Owen, and that is all the time we have for you today. Peace.